Investing is easy. This is how you do it. You download this app called EasyEquities. It's the most reputable company in individual investors, non-accredited investors. So these are the companies that I put on my watch list for in case I want to invest in individual companies in the future. Okay, first of all, I should give you a disclaimer. I'm not an accredited financial advisor, nor do I care to be. And also, investing is not a way to make more money. It's a way to put some money aside. So people who tell you invest in SAB to make more money, you will double. That's not the point of investing. To invest, you invest so that you can put some money aside by giving it to people who want to use it. So if you do it with the aim of wanting to get rich, I think it's a really bad mentality, because as soon as it goes down, you're going to pull out because you don't want to lose money. But in the long run, people who invest with the goal of, I want to take my kids to university in the next 20 years or in the next 5 to 10 years, then they are in the right mindset, which is the mindset with which you need to invest. So you see this high dividend, Vanguard, Van Eck, these Charles Schwab's, all this, and iShares and Power Shares and all these things. These are ETFs, which are exchange traded funds. These are baskets of companies. For example, the S&P 500 is made up of 500 biggest companies in the world. So there's no way you can go wrong with investing in an ETF, because if you can look at this graph, even if it goes down, it goes up. Generally, it has never failed since the 80s. So people who tell you invest in ShopRite, SAB, Escom, all these things, they don't know what they're talking about. And those people are like gamblers. They are traders. You don't download this app to trade. You download it to invest. If you want to trade, it's more like gambling. You can do that, but this is not what I do. Money that can be run by an idiot, which is the reason why he's rich, because he invested in Coca-Cola. He didn't invest in Apple or Google, or no, because he does not understand those things. If you don't understand the company thoroughly and how it makes its money, who the shareholders are, what their next move is, don't ever invest. No matter what people say on social media, hey, invest in ShopRite, Woolworths, because the stock is going high. If you had invested 5 years ago, you would have had double your money. No, the point of investing is not to double your money. The point of investing is to put your money aside for when you need it the most in the next 10 to 15 years. So I put some things on the watching list. And this is, I don't even worry the fact theory. These things have gone up. If I had done it, I would have benefited. That's a short-term view of the stock market. You invest in something that's very consistent, even though it doesn't give you that many rewards. For example, okay, I'll show you Woolies. You see Woolies, an average annual return on an investment is 8%. Woolies, if you look at it, Woolies Holdings, you'll realize what it says, 10%. This is a monthly growth. If you go to it and you look at it and you click on the thing, the monthly thing here, this is the reason why it says 9.64. If you go to 3 months, it has been growing. 6 months, it has been going down and up. The whole year, down and up. But if you look at the bigger picture, you will see that Woolies stock is actually really going down. So if you listen to people who say, invest in Woolies now, they are looking at this graph now. They are not looking at the bigger picture. Look at the bigger picture by looking at the big baskets, which is S&P 500, total wealth stock, which is this one's. So if you look at the total wealth stock, it's going up. It has its ups and downs, but generally it goes up. You see? Generally it goes up. So invest in exchange traded funds, aka ETFs. Another thing that you can do, which is a life hack that is also a privilege given to us by the government. The government of South Africa wants us to invest in things that are beneficial to the economy. So they give us a chance to invest in a tax-free savings account, TFSA. A TFSA again, you can say it again. TFSA, TFSA it again. Okay. TFSA is a tax-free savings account. They give you a maximum amount of 36,000. You can't invest more than 36,000. If you invest more than 36,000 a year, if you invest more than 36,000 a year, anything on top of 36,000 will be taxed. The reason why they are doing that is that they don't want people to use TFSA as a way to evade paying taxes, because it's a tax-free savings account. These are the things that our government is wanting us to invest in, which is the reason why they don't want us to pay tax, so that we can save money and make more money by investing in these things. All these things are things that benefit the government, so invest in them. Within these things, these are people's pension funds. So invest in an ETF, a TFSA, invest in EasyEquities, ZAR. But when you do that, don't invest in these small individual companies. Invest in ETFs, which are Satrix 40, all these things. These are baskets made of Indy 25 is 25 companies. Fin 24 is financial technology companies, which are 15 in number. You're investing in a basket made up of many companies that are doing very good. ETNs are like exchange traded notes. I never invest in notes. Most of my money is in properties. I love properties because it's a long-term thing. The investment term on the properties is minimum of them is 8 years, and I'm looking at a timeline of 8 years. So there's more money to be made if you're doing long-term. And I also don't want to be tempted to withdraw the money because it's not liquid. So, because if you invest in EasyEquity or TFSA, you can withdraw it at any time. So I don't want to do that. EasyEquities USD, these are US companies. They've got their own ETNs, ETFs, but I love ETFs.